I can and I will. So investment properties can be pretty straightforward, or they can be a little bit tricky depending on your situation and what type of loan you go with. So the easiest way that I tell people to get into investing, which I don't know your situation, but if you can go with an FHA loan and buy a 2, 3, or 4-plex, and you are allowed to put 3.5% down, and we can use the proposed rental income on the second, third, or fourth unit to help offset the mortgage, that would be the easiest way to get into investing, but you do have to live in one of the units for at least a year. It's a requirement. But let's say you don't want to live in the property and you don't want to do multi-unit, whatever. Then you would go with a conventional loan. Generally, you go with a conventional loan and you would put 15% down as the minimum requirement. If you put 20% down, then you don't have to have mortgage insurance. Or if you put 15% down, you can just buy out your mortgage insurance ahead of time instead of putting the 20% down. And so if you went with the investment property with a conventional loan, you put the 15% down, whether you buy out the mortgage insurance or not, then what would happen is you could then purchase the home as an investment property. Now, the interest rates are going to be higher on investment properties than they are on primary homes. And most people don't know that, and they don't understand why an investment property would be higher than a primary. But if you think about it, let's say, God forbid, you had to default on a home. If you had an investment property and a primary and you couldn't pay for one of them, you're going to default generally on your investment property since you don't live there, and you're going to not default on your primary. So it's a bigger risk on the investors that hold the loans. So your interest rate just is higher on an investment property, and it is higher on a second home because that's a luxury. And then obviously the lowest is going to be your primary. And then for the conventional loan, we would use your income, let's say from your job, to qualify you. Plus, we would use the proposed rental income off of the home, which we generally get from the appraisal, and it bases it off of the comps in the area, and that's how we would go ahead and qualify you for that particular investment property. And then there's DSCR loans. There's other types of loans we can look at, but that's kind of just the basic run through. So if you want to know more, let me know.